Hey, Jason, what's going on? Just getting warmed up still.
What's the difference between the Gen 2 and the
The fight for Texas is on. Check this out.
Good evening. My name is retired Lieutenant Colonel Eric Brock, and I've served this nation for 29 years, 13 as an A-10 Warthog pilot, 4 as a reconnaissance pilot, and I lived under Sharia.
Live. We're live everywhere. Yay! Just about ready. Still getting ready. Still getting ready. Almost ready. Dreamer who lights up the dark. That's to know what the hell were you thinking? Your life doesn't run, keep the daylight blinking. Everything's a quick loss from the next life. Always a chance to All right. Let's get the ball rolling. Rolling. Let's get that old ball rolling. Get him in. Ride him up. All right, where am I? Right there. I believe that's it. I believe this is killing me as a smile ran away from his face. I said I sure could be. All right, anyway. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I show you how I invest in dividend stocks for weekly cash flow, looking for a 1% every single week. Simply, safely, predictably, consistently. Love the Lee family, don't you? All right, let's see who's in the house tonight. Who do we have? Nice. Justice Hedgewood. Good evening. All right, who do we have over here? Jason, nice to see you. Strong Vision. What's up? Thank you for all that help. You got it? Not a problem. Faber, user. Okay. All right. Hi. Hello. Wonderful. Who do we have down here? Down here we have Jake. We have Toast McGroats. Cool name. We got Chuck. We got Bam Bam. Bam Bam's back again. Jean Montiel, comment ça va? Bonsoir. Jimmy Noobs, Bob Pitts, Bryn, Scott, V-Dub, okay. Jovan, what's going on, Jovan? Tufan wants to take a look at Zeta. Zeta? Really? Zeta? Okay, we'll take a look at it. Hold on, sit tight. I'll look at everything. Whether I like it or not, it's a different story. Zeta, Zeta. Interesting. Let's keep on going. Tufan, we'll take a look at that one next. Who do we have over here? We have Ramsey, Bright Tread Mikey. Bright red monkey. Okay. Brian Dean, what's going on? AJ. Hobby Queen. V-Dub. V-Bud. V-Bud. Okay. Toaster. Shelf. Shelf Righteous. Oh, okay. Shelf Righteous. All right. Bruce Smokey, God's Patriot. Sam wants to take a look at Microsoft. Rambo's in the house. Way to go, Mr. Rambo. All right. User, something. I can't read that, dude. I live in Accra. First time. You do realize that I have no idea what Accra is. ACCRA. Now, I don't any disrespect whatsoever from wherever you come from, but I've never heard of it. So if you would enlighten me, that way I can enlighten the crowd, okay? So, that being said, just get the ball rolling. Ghana. Oh. Acrobat, Iraq. Okay. Cool beans. Wow, that's a long way away. Anyway, besides the point. Where was I going with that? Let's get the ball rolling. So you guys are going to suggest stocks for me. I'm going to take a look at them. We're going to see how they fit. Now remember, I'm looking for a simple, safe, predictable, consistent 1% every single week. Now, I'm 62 years old. I'm retired. So, I forgot to put the recorder on. Turn on. There we go. All right. So tonight is, what is it? It is July 15th, 2026. It's right around 8 p.m. Eastern Standard Time. Let's get the ball rolling and see what's going on. Be cordial. Be nice. You don't have something nice to say, don't say anything at all. It's all voluntary. You come here, you be nice. It all works out good. You give me stocks, I take a look at them. Do they fit the category or do they not? Are they profitable or are they not? Do they have options or do they not? Got they weekly options, monthly options, dividends? Are they increasing? Are they decreasing? All interesting questions. It wasn't until 2008 when my nine-year-old daughter says to me one day, Daddy, what are you doing? Can you teach me? So my nine-year-old daughter wants me to teach her how to invest in the stock market. Well, I have to admit, most adults don't get it. I mean, I kind of had a good idea what I was doing at the time. But here's the thing. How do you teach a 9-year-old? Well, the strategy's got to be simple, safe, predictable, consistent, and then no way for her to lose. Because let's jog back for a second. Sit tight. No way for her to lose. That's a very important one. She, not he, she is 9 years old. She loses her money, she's going to cry. And when little baby girl cries, she goes to mama. When mama has little baby girl crying, guess who's sleeping on the couch? Yes, yours truly. I did spend many nights on that couch, but not for this reason, okay? My 9-year-old wanted simple, safe, predictable, consistent, and no way for her to lose. So there's 5 very simple rules. Safe, predictable, win. Oh boy, can't wait to hear this. Sit tight. Hey, Soggy Biscuit. Nice to see you again. Matt, we'll take a look at Caterpillar in a little bit. Sit tight. So, for my 9-year-old, simple, safe, predictable, consistent, and no way to lose. So 5 rules. Now, for my 9-year-old, the rules are very simple. Never buy anything that's not on your list. That kind of breaks it down, doesn't it? Never buy anything not on the list. For my 9-year-old, it worked perfectly. Number 2, never sell at a loss. Number 3, make sure the company was consistently profitable. Number 4, weekly options only. And then number 5, make sure all the numbers work. Well, we're going to get into each and every single one of those as the night progresses. Just like a good movie, everything comes together in the end, and they all live happily ever after, riding off into the sunset, blah, 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 blah. Okay, first one on the list tonight, we're going to look at Zeta. Anytime I look at anything, it's always going to be the exact same. A, B, C, 1, 2, 3. I'm looking for the exact same thing every single time. Simplicity, safety, blah, 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 all that kind of stuff. But bring up a chart. Always want to look at the 1-year chart first. That's me. You guys got to figure out what works for you. But for me, it's my show, so we're going to do it my way. Okay? All right. First thing I want to see is the 1-year chart. I'm looking for 5 things, and it takes me 2 seconds to see all 5. Can you count to 5 within 2 seconds? Okay. The top, the bottom. Where was it? Where is it? Where is it going? That's simple. Okay? Top, bottom, where was it? Where is it? Where is it going? That's it. You can see it. Take one look at, open your eyes, boom. High, low, was, is, where's it going? That's it. 2 to 3 seconds. 2 to 3 seconds. That's all it takes. And if it passes that, great. We go to the next step. The next step is, remember rule 5? Make sure all the numbers work in your favor. Well, in my favor. Okay. What am I buying it for? 22.41. 22.41. 22.41. 22.41. That's the current price. 22.41. So, if I buy it, hold on, had an issue with camera. If I buy it for 22.41, now I want to sell it 2 seconds later. 1 second if you're quick enough. But as soon as I buy it 2 seconds later, I want to sell it. But I want to, you can only see half the screen. Sorry, John. This is the only camera I actually take on and off all the time, so every once in a while it doesn't fit. Now I forgot where I was going. Shit. Don't get old. It goes eventually. All right, so if I'm buying it at 22.41, that's my price. That's what I'm paying for it. Well, now I want to sell it for a profit. But here's the funny thing. The absolute easiest strategy there is just buying a good quality company. That's it. But it has a major downfall. Major. Do you know what major means? Major means it's a huge issue. So buying the stock, there's a huge issue. You know what it is? Time. You gotta wait. And then you gotta wait some more. And then you gotta wait some more. You have to wait for the stock to move for you to collect your profit. There's nothing wrong with it. People have been doing it for over 400 years. Believe it or not, stock market's over 425 years old. It's an old sucker. It's been around 400. Joe Schmo, thank you. So the stock market's been around for 425 years. Well, great, it's not going anywhere. So the oldest, easiest strategy, no thank you. I want the second easiest one. And that, my friends, is the covered call. It is so safe. Remember, simple, safe, predictable, consistent? Well, the simplicity part of it, it's not the easiest. It's like the second. It's the third easiest. So buying is the easiest, selling is the second. A covered call would be third. So that's pretty high up there. It's a very easy strategy. I buy the stock, whatever price it is at the moment, and then I turn it around within 2 seconds and I sell it using a covered call. Basically, all I'm doing is saying, I'm buying at 22.41. I'm going to sell it at 22.50. That's it. But you have, whoever buys this, has however much time is left on the expiration date. Because when you sell a stock, it's a contract between two people. But when you do it using a covered call, using a stock option, you need 4 things for it to be a legal binding contract. You need a beginning date, which would be the day I actually sell the option and you buy the option. That's the beginning. That's the commencement. It starts when money is exchanged. By the way, you need money. You need a beginning date, an ending date, consideration. These are technical terms, ready? Beginning date, ending date, consideration, and then meeting of the minds. It just means an agreement between two people. So the beginning date would be the day I sell it. Okay, the ending date would be whatever the expiration date is. 17 July, that's this Friday. 24 July, that's next Friday. 31 July, that's 3 Fridays away. 7 August, 4 Fridays, 5 Fridays, every single Friday there's another option for me to use. Okay, so I buy it 22.41. I sell it 22.50. Now remember the part where I said make sure all the numbers work? Remember rule 5? Make sure all the numbers work. If I'm buying it for this, I'm selling it for this by this date here. For that privilege to lock me in at that price, someone's going to pay me 49 cents per share. Now, I know when I say 49 cents, you're probably going to get, ugh, really? It's a numbers game. Don't ever forget that it is a numbers game, and numbers always win. There's just no other way around it. Okay, so 49 cents. Whoop-a-dee-doo. But it really is a whoop-de-doo because 49 cents is more than 2% of the purchase price. Are you seeing where I'm going now? 2% of the purchase price. So if I can get 2% this week, what can I get next week? What can I get the week after? It's a simple trading philosophy. You buy a good quality company that's consistently profitable. You sell somebody the rights to buy it from you at a certain price called the strike price by a certain date called the expiration date. I only do weeklies because I want to be paid on a weekly basis. I'm terribly sorry. Buy dividends, great. You get a check once every 90 days. You do monthly options, great. You get a check every 30 days. No, thank you. No, I'm not a day trader. No, I trade every day, but I'm not a day trader. Okay? Nelson, if you need some explanation about it, I'll give you more, but I'm not a day trader. I trade every day, but I'm not a day trader. So, as I was saying, Nelson, what I mean by I trade every day, I get on my account. I have 7 of them, so I have to look at every one of them. I get on my accounts and I check. What did I buy? What did I sell? Where is it? Where's it going? What should I do? I do that every single day. And every once in a while, I got to make a tweak here, a tweak there, just to make sure everything is correct. Okay, so it's the same question every day. What did I buy? What did I sell? Where is it right now? Where does it look like it's going? And what should I do next? Every single day. So yeah, I'm online every day, and every day I do something, but I'm not a day trader. A day trader buys a whole bunch in the morning, looks for a certain setup, get a little bit of this, a little bit of that, but they spend all day long in front of the computer. No, thank you. I want to be in front of my computer 10, 15, 20 minutes. That's it. It's called the 10-minute trader for a reason. Remember, it was created for a 9-year-old. How long do you think you can get a 9-year-old to sit down and concentrate? About 10 minutes. All right, anyway, Drazek, what do you do with your held shares from the previous week that didn't expire in the strike price? Dude, hold on a second. Drazek, I'm going to give you an example. You're going to love it. Sit tight. Okay, so as I was saying, once you own the stocks, you can do whatever you want with them. So if I buy them tomorrow morning, 2 seconds later, I'm going to sell them to someone else at a predetermined price by a predetermined date. Strike price, the closest one, the 22.41, is the 22.50. And what is it going for? It's going for 49 cents a share. Well, that's more than 2%. Well, here's the thing. If the stock is above 22.50, remember, I'm buying it for 22.41. Well, I get that little 9-cent profit. Big deal. It's not what I'm looking for, but thank you. Not what I'm looking for. I'm looking for this right here, the premium. So if I'm getting a little over 2% on the premium, a little bit right there, but the stock has to be above 22.50 by the end of business on Friday. Okay, well, on Monday, I will be a little bit richer. I'll get all my original money back. I'll be a little bit richer, and then I get to pick another one. If the stock is above 22.50. What if it's not above 22.50? What if she goes down and she's less than 22.50 by Friday? Well, guess what? That option expires. I still own the stocks, and then next week I can sell another. Hold on, let me open it up so you can see it. Okay, I can sell another 22.50. And if that's not filled, I can go to the next one, the 31st of July, and sell another 22.50. As long as I own the stock, they're in my possession, they're in my account, I can do whatever I want. I can sell a covered call every single week until my order gets filled. What's my order? My order is to sell it at 22.50. I'm buying it at 22.41 every week. Premium, thank you, Elias. That's 2%, probably another 1 or 2%, probably another 1 or 2%. And if he finally goes up over 22.50, I get all my money back and I get all those profits. I think that's just freaking amazing. Anyway, let's keep on going. So, I'm not quite sure about this one. Even though the numbers work, The chart's telling me no. Let me zoom in a little bit closer and you can see why it's a no. And then you can say it with me. That's a no. All right, ready? 30 days ago, we're way down here. She shoots up nicely. What do you got? You got a 30-day high today. And it actually started going down today. So as much as I like the company, all right, I don't even know who these are, the Zeta, but all the numbers working out like that. That's great. But no, because the stock has already done its run. They go up and then they go up until they're done going up. And then they turn around and go back down again. And then the craziest thing, they go down until they're done going down and they turn around and go back up again. It's weird. It goes up, it goes down, it goes up, it goes down, it goes up and down, up and down. That's all stocks do. They don't come in the house, take the dog for a walk. Nelson, nice to see you. Lucky, how's it going? How you choose what premium to pick. Lucky, I cannot believe you're asking me that question. Seriously, dude, I can't. I seriously cannot believe you're asking me that question. If I'm buying the stock at $22.41, I can choose whatever option I want. I can choose the 20s. I can choose the 2050s, 21s, the 21.5, 22, 22.5. I can even pick the 24s if I want. I can pick whatever I want. It's a personal decision. For me, 22.41, the closest strike price is 22.50. It just makes sense to me. And I'll get this. Oh, it's paying me 2%. Great. That's how I pick. It's not the rule. You have to figure out what works for you. Okay, now you and I have never had a conversation before. But if you buy it for $22.41, it's your decision to pick which strike price to sell it at. So if you buy it and you own it at $22.41, you can sell it at $22 if you want. You can sell it at $24 if you want. You can pick whatever you want. It's a you thing. Me, I would pick $22.41, $22.50. It's closest, it's the simplest. The safest one is just the 22. But I'll take the $22.50. It's a little bit more profitable. And it still looks good. And I don't mind owning the stock. Always make sure I don't mind owning the stock. Rule 1, never ever buy anything you do not want to hold on to long term. If you can't imagine yourself holding it for the rest of your life, don't buy it. All right, Brian. Brian said, oh, wait a second. Hold on, I'll get to that in a second. I get some more questions. All right, so Matt wants to take a look at Caterpillar. I'm going to put Caterpillar in and I'm going to answer these questions because they sound interesting. Caterpillar. Okay, so I got a question here. Safe, predictable, win. Oh boy, can't wait to hear this. All right, soggy bond, soggy biscuit. Caterpillar. We're going to take a look at Caterpillar in a second. Matt, thank you. Soggy biscuit. How to compete with AI traders. They are fast. You do realize I'm not looking for the same thing. Okay? Now, if we were in a race going to achieve the exact same outcome, yeah, I wouldn't have a chance. But we're not looking for the same thing. Okay, so we're running two different races. They're running that way and I'm going this way. Huge difference. Soggy biscuit. How many of the world trades are made by machines versus human percentage-wise? Don't know, don't care. How to sell seed rounds, stock, company, it's not an IPO. That's definitely a wrong question, dude. Okay, Brian. Investing seems so difficult, especially trading. Brian, you know, it'd be great to have a conversation with you. But from what you've given me so far, I want to show you something, Brian, specifically for you, and I want you to feel bad when I show this to you. I got a certain reason for this. Yep, I'm specifically doing this to make you feel bad, Brian. Videos, going to my YouTube channel, videos, the 10-Minute Trader. We'll look at the oldest videos.
Hi, I'm JC, and me, as you being part of my internet website company.
It's my 9-year-old daughter.
That's what I do.
But it's when she's 11 now.
Being part of that, you're going to be getting weekly lists of...
For 20 days. Okay, so that's me, and that's my daughter when she was 11. Now, when she was 9, she asked me, Daddy, can you teach me? So I am giving you the exact same information I gave to my 9-year-old daughter. Now, the interesting thing there is she was 9 years old. In order for you to be on this channel, you got to be at least 18 years old. So I'm kind of extending an olive branch here to you, if you understand what the meaning of that is. I'm kind of thinking you might be a little bit more educated than a 9-year-old. Okay? It's really not that difficult. It's kind of like driving a car, riding a bike, tying your shoes for the very first time. Okay? Almost like anything. It's a little challenging at first because you're using thought processes, you're using muscles, you're using certain things you've never used before. You have to change your whole language and your whole thinking because we're not investing for annual returns. We're investing for weekly returns. Joe Schmo, come on, dude. Lyft is not 20 years old. You should know that better. Thank you, Arul. So, as I was saying, it was created for a 9-year-old. Sit back, relax, and just go with the flow. You're not being asked to buy anything. The education is free. You just got to tune in and take the pieces of the puzzle one at a time and put them together. Probably the most you'll get out of it first is name recognition of some of the companies that we're looking at. Ford, General Motors, IBM, AT&T, Home Depot, Lowe's. Nothing weird. I only like what they call brand name companies. I'm not really talking like brand name like, snotty brand name. No. I'm talking about everyday American companies. Bank of America, Wells Fargo, AT&T, IBM. Companies like that. You probably heard their names. Okay. So that's the first part. That's the easy part. And then as you stay longer, you'll get a little bit more, a little bit more. And then eventually there'll be one piece of the puzzle that clicks everything together. You say, oh, shit, that is easy. So you're new here, very first time, chill, relax, and absorb what you can. And don't try to eat it all at once. It's like an elephant. You can't eat it all at once. It's like one bite at a time. Okay, so relax. Market's been around for over 425 years. It's not going anywhere. Okay, there's always another good trade right around the corner. Okay, so let's keep on keeping on. But thank you for tuning in, though. All right, so like I said, that's me. And that was my 9-year-old daughter when she asked me, can you? Okay, how much should I put in for a weekly trade? Nelson, I started off with $12,000. Seriously, I did. $12,500. I took a second mortgage out on my house. The wife was pissed, and I enjoyed the couch for a little bit. Some of you guys know what I mean, and most of you women probably know what I mean. So yeah, my first attempt, $12,500. Yeah, it lasted me a couple of years, and then evolution. But you need to paper trade first. Okay, it's not going to cost you anything but time. But when you screw up, you want to screw. It's like Monopoly. 4 greenhouses, 1 red hotel, round you go. You definitely don't want that piece of property, but utilities definitely. It's a game. Learn the rules. Learn what you're doing. Go in with the expectation of creating a weekly cash flowing asset. Practice first. Paper trade doesn't cost you anything. It's the same stocks, the same numbers, but it just says virtual trading account. Learn first, but you'll know when you're ready to put real money in. You have a little nagging voice in the back of your head. No, not your mother-in-law. The other nagging voice in the back of your head. Sorry, ladies. Some of you guys got that one. All right, so no to that one. Let's go back to where we were. Got sidetracked for a little bit. Sorry about that. All right. So Caterpillar. No. The reason I'm saying no to Caterpillar, the high's right there, and now she's coming down. But is she coming down to a point where it might be good to jump in? Well, here's where you have to ask yourself a question. And it's one of those questions some people, really don't want to ask, okay? This company is $914 a share. To do one covered call on this, it's like $90,000. I don't do stocks over $300 that often, very rarely. Never over $500. To me, it just doesn't make sense. But then again, I grew up in the 60s, dirt ass poor. So it is what it is. All right, so no to Caterpillar. Other than the price being way out of my range, it's coming down at the moment. But if you really like Caterpillar, hang tight. That bottom's going to show up any day now. It could be tomorrow, could be the next day, could be the next day. But when she does hit 30-day bottom, I wait 2 days to the upside, and I jump in on the third day going up if everything else goes along with that. Okay? Okay? Okay, pumpkin? That works. Is she still trading? No, she's not still trading. Okay? See, when she was 9, she was like my shadow, right up until she turned 13. See how many people put that together. All right, so what else do we have? Okay, Tufan wants to take a look at ONDS. What the hell is ONDS? It's like a pond without any P. Yeah, it's a clean pond. Pond without any P. That's terrible. All right, this one's going down also. Wait a second. Let me back up for a second because I can almost bet you didn't. I just do it quickly because I can see. 5 things. The top, the bottom, where was it, where is it, where is it going, okay? Every time you see a chart, that's the first 5 things you should look at. Where's the high, where's the low, where was it, where is it, what is the cash flow, where's the going? All right, so once I do that, I want to go to the 90-day, the last 3 months. Same thing, top, bottom, was, is, up, down, up. What's going on right there? It's still in a slow trend downward. So let's take a closer look. Last 30 days. Okay, that doesn't look that appetizing, does it? Okay? But if you really like it, keep your eye on it. Here's the bottom right there. If you really like ONDS, the bottom showed up today. But it could go lower tomorrow. Okay, so stocks go down until they're done going down. Because they only do 2 things. They go up and they go down. That's it. They don't do anything else. All right. Next. All right. Where are we? Cam, what's happening? Johnson & Johnson, Can Man. Oh, we have Cam and Can Man. Okay. All right, so Can Man wants to take a look at Johnson & Johnson. Now, I haven't traded Johnson & Johnson in decades, J&J, because they very rarely ever give me any decent money. Look, 247 is going for $1.70. That's for this week. What is the number for next week? Well, it's going to be a no anyway. Top is here and she's dropping. But if you like Johnson & Johnson, okay, 30-day bottom, then she shoots up, 30-day top. Now she's coming, looking for another bottom before she turns around again. So no for this week. But I do like Johnson & Johnson. La 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 la. Joe Lewis. Love that show. Thank you. Baron. John Didier. TikTok cam, where too far to the right. Yeah, got it. Can you please move the camera? Got it. Uh-oh. We get 1 person every night. Sometimes we get 3 or 4. This dude wants to take a look at QQQI. Who wants to tell him? No. Wasn't that quick? Now, I'm not going to go into the fact that Qs aren't even profitable. Okay? Not consistently anyway. But I don't do monthlies. See, July, August, November, February. Those are months of the year. They just don't work for me. I only like weeklies because I look for weekly income. I don't like monthlies because you can only do it once a month. That just doesn't work. All right. Do I day trade? No, I do not. All right, got that question. ONDS did that one. What platform? Jose Luis, what platform am I using? That is called Think or Swim. Okay? And that is offered through Charles Schwab. If you can make me money, I'll pay you for real. Why, thank you there, the Noah King. Ryan, I bought Lowe's at 222. Now the price is 209. So the 222 strike would be worth less than 1%. So do I skip it? Sit tight. Let's bring up Lowe's right now, Ryan. How's your day going, Mr. Ryan? Lowe's, L-O-W. All right, Mr. Ryan, check this out. So you bought Lowe's at 220. Now, I don't know when you bought Lowe's at 220 because 220 is here. So it was 220 here, it was 220 here, it was 220 here, and it was 220 there. This is the whole year. So I always like to look at the whole year chart first. The high of the year, the low of the year, where was it a year ago, where is it now, and what is the motion? That's it. Okay? So my assumption is you bought at 222 somewhere in this area, because that's the closest one. Other than that, it was probably way over here or way over there. But besides the point. So you got a couple of choices. You're in at 222, and now she's there at 209. Well, let's zoom in so you can see exactly where it's going. Because I like to ask myself a question, Ryan. 5 questions, actually. What did I buy? All right, I bought Lowe's at 222. 222 is right there. Okay? Now it's down here. Okay. So I don't want to sell the 222s because there's not enough money there. Let's do this. 4, let's do 12. I don't want to do this week because there's not enough time value there. So what does it look like next week? The 222s for next week. Okay, now I don't know how many shares you bought, but the 222s for next week are going for 30 cents a share. It's not a lot. It's 30 cents per share. So if you got 100 shares, it's 30 bucks. You got 200 shares, it's 60 bucks. 1,000 shares, it's 300 bucks, so on and so forth. But here's the thing. If it was me, we're here now, I'd probably go with the 216s or the 218s, far enough away from where the action is, but I'd only do it for 1 week, which is only 5 days. And then I would look at it every single day, and of course, I would set myself an alert. An alert is very easy to do. Just right-click, create an alert, and then I just put whatever number I want right in here, and then I hit create. And then, if between Monday and Friday, whenever you do this, you take a look every single day. What did I buy? Well, I bought Lowe's at 222. What did I sell? Well, I'm selling the 218s or the 220s, whichever one you're doing. Okay? Where is it at? Well, let me get rid of this thing. Okay. Question 1. What did I buy? Lowe's at 222. Where is it? Lowe's. Lowe's, yeah. Lowe's at 222. What did I sell? I sold the 218s or the 216s right here. Where's it at? It's at 209. Where does it look like it's going? It looks like it's going up. What do I do? That's the one you're stuck on right there because you know what you bought. And at this moment, you said you didn't sell anything, I'm assuming. So you're looking at what to sell. I can't tell you. You have to figure it out for yourself. Okay, what did I buy? Lowe's, 222. What did I sell? Okay, me, I do the 218s or the 216s. I'd pick up a little bit of money and keep my eye on it and set an alert. So for 5 days, can it go from here to here in 5 days? If you think yes, well then don't sell this one. Sell that one. If you think it can hit that, don't sell that one. Sell this one. You have a choice to do whatever you want. You also have the choice of doing absolutely nothing. And there's nothing wrong with doing nothing. Okay? So, that's what I would do in that situation. But here's one of the big points. Number one, you picked a great company. Lowe's is a great company. They got 5 decades of increased profits. That means for 50 continuous years, 50, 10, 20, 30, 40, 50 years or more, they've increased their profits year after year after year after year. So even though the stock is down, next year you're going to get a higher dividend. Not guaranteed, but they've done it for 50 years in a row. So 51 should be relatively easy, right? No, I'm not. It's not a tip to go buy Lowe's. No, it's not that at all. It's just an observation. Lowe's is a dividend king. Lowe's has 5 decades of consistently increasing their profits, their dividends. So, for me, it's a no-brainer. But I can't tell you what to do. So, rule 1, never buy anything you don't want to hold on to for the rest of your life. That's rule number 1. If you don't understand it, don't buy it. If you think it's going to drop and you feel uncomfortable about it, don't buy it. You don't know what the 52-week high, the 52-week low, what the variations are, how much it can move. If you don't know that stuff, don't buy it. It's your money. Learn the best place to put your money and take responsibility for it. Okay? So don't get me wrong, Lowe's is a great company, 222. So, what's the big deal? So you sell the 222s, you pick up a little bit of something. Next week, you do it again. Next week, you do it again until it gets back up to the 222. So, if I sell the 216 or 218, wouldn't that be selling it for a loss if I bought it 220? No. Ryan, you're not listening. Okay? A call option, the covered call. You're only giving them the right, listen closely, you're selling them the right to be the first person to buy it from you, which means no one else can buy it from you other than that person, as long as that option is still alive, which is between whenever you sell it to whatever expiration date you choose. So if you choose 24 July and it never goes over 220 or 218 or 216, whatever, they don't take it from you. But when you do that, you got to remember, if you sell the 218s, right? And the person, there isn't a 218, 217.50, 217.50. Okay, the person is going to pay you $1, which means their break. I got to write it down because it's going to get a little confusing really quick. All right. Next week, 217.50. The 217.50 call option. It's paying $1 a share. Okay, $1 per share premium. Okay, so whoever bought it from you, their break even. Now their break even means they are at 218.50 just to break even. And nobody wants to invest just to break even, okay? So if they want to get a 10% return on their investment, 10% would be another 10 cents. So now that their break even is 10% would be $2. $2, that would be $2.20. Yeah. For them to get a 10% return on their money, the stock has to hit $2.20. It's always a numbers game. So when you sell it at 217, there's no 218. This is 217.50. You add the premium into it. That's their new break even. That's just to break even by Friday, which means the stock has to go up a lot more in order for it to be profitable for them. But here's the thing. If you look at it every day and ask yourself those 5 questions, what did I buy? What did I sell? Where is it? Where's it going? What should I do? If what should I do comes back to the fact of, you know what? It moved up a little bit. I did sell it for this much money, but I could buy it back, releasing me from that contract. So if you sell it for $1, and as time passes, the option price will either go down or up. If the option price goes down, you could buy it back and get out of that contract. If the price goes down, you don't have to do anything. But it's always going to be a numbers game. What did I buy? What did I sell? Where is it? Where's it going? What should I do? Okay. So I'm actually going to look at Lowe's because Lowe's has 2 days to the upside. But during this example, it's come to my mind that number 1, Lowe's is a dividend king, 5 decades of increased profits, 30-day high, 30-day bottom, 1 day up, 2 days up. Sorry for your loss, dude, but it opens up an opportunity for me. Seriously, I'm sorry, okay? But 30-day high, she drops, profit taking, here's the bottom, now she's going back up, here's 1 day up, There's 2 days up. The 209 right at the moment. Am I going to sell the 209? No, I'm going to sell the 210. It's going to give me 340. Okay, watch this. I feel bad because I'm going to use this as an example. I am. Watch. All right, we're going to get rid of this. Oh, come on, get rid of this. Go to the covered call. Right there. Ooh, shit. The 209s. I need my glasses for this. 209, the 210s right there. All right, 210s. Here we go. Are you ready? This is what it should sound like. One covered call of Lowe's. I'm going to buy one covered call, Lowe's, L-O-W. Sell 24 July 26. That means this option is going to expire next Friday, the 24th. The 210 call option, well, the stuff I'm buying it at 209, I'm going to sell it at 210. Okay, and I'm going to pick up $399 for one contract. Now, that doesn't mean anything other than it's $400 for one contract, but what's the rate of return? Now, remember, I'm looking for a 1% rate of return. What does this deal look like? I don't want you to feel bad about this, Ryan, but you know, hey, money's money, right? Where did you go? Where did you go? I'm hoping on a one-way street. I am okay, come on. Let's get out of that. Get out of that. Get out of that. Where the hell's my calculator? What the hell is my calculator? There it is. Get rid of that one. I got 3 calculators. There it is. Took me long enough to find the damn thing. All right. Here we go. Calculator. There you go. One more time. There we have it. Now I get the calculator. Oh, it took me long enough. All right. To find out the rate of return, I need a couple of numbers. Do you remember the part where I said simple, safe, predictable? Do you remember that part? Simple, safe, predictable, consistent, 1% a week. Do you remember that? Predictable, I know what the trade is. Remember, I haven't done anything yet. This is just the trade. Okay? Here's my break even, 206. Here's my max profit, 399. Here's my max loss. Here's the cost of the trade, including commissions and fees, 20,000. Here's the cost if it was going to be on margin. Here's me everything I need to know right in this little square. Oh, if I forget, the screen behind me, this right here, is on YouTube right now. So if you can't really see all the numbers really good, you can go in the other room on the big screen TV. Yeah, the big screen. And pull it up on YouTube to see the numbers. Okay, so there's my profit. There's my investment. To find out my rate of return, I got to take the profit and divide it by the investment. So we got $3.99 divided by the cost of the trade, including commissions and fees, $20,601 for one contract, and it's giving me a 1.9% for 1 week. So the questions would be rattling around in my head. Number one, does it make sense? If I buy it, what was the price? Let's clear this out of the way. Okay. If I buy it for $209.66 and I sell it for $210, selling it for more than I paid for it. Someone's going to pay me $400. I put up 20 grand, but when they buy it from me, if it's above $210, I get all my money back. But look at it this way. I'm not buying stocks. I'm creating a weekly cash flowing asset. It's costing me 20 grand, but what is it giving me? Well, this week it's giving me $399. What is it going to give me next week? Another $399, $400, $450, $500, $300, $200. It's an asset that if you look at it this way, if I buy it at $209.66 and I never ever ever sell it for less than $210, I will hold it to the day I die before I will let it go for less than $210. because that's my choice. I like the company. It's a good company, and I'm okay with holding it for the rest of my life because they have 5 decades of increasing profits, and the premiums they give me on a weekly basis makes me a happy camper. So this week is giving me $3.99, which comes to 1.9% for 1 week. And I'm okay with 1.9% for 1 week. Because if 1% a week is 50% a year, what do you think 1.9% a week is going to be? I'm perfectly okay with it, so I'm going to save this one. Number 1 for the day. Here we go. Lowe's. It's about time we found one. My goodness. All right, Lowe's. I try to find 5 every night. Last night we can only find 4. So can we get 5 tonight? Can we? Boom, ba boom. Oh, I can't. All right. Damn it. I wanted to ask him a question. All right. That being said, oh, here we go. Let's do this. That's small, man. All right. Ooh, shit, where's all the other ones? All right, don't know where they are. Here it is. One covered call, LOW, Lowe's, 24 July. That's this coming Friday. The 210 call option. Well, it's my profit. There's my investment for 1.9% for 1 week. Can you zoom out a bit so we can see the entire screen behind you? Didn't I just say that entire screen is live on YouTube if you can't see it from where you are? There's a reason why it's live on YouTube. Get a bigger TV. I think I saw a 70-inch TV for like $400. It's crazy. I want the 110. They have a new 110. I think it's like $1,000. I says, yeah, drop that baby off. All right, so 1.9%. I like that number. Oh, there they are, right there. That's last night's. All right, there we go. 1 point. Well, I can make that bigger, don't I? Here we go. 1.9%. And this is L. Come on. LOW. All right, let's get another one going. Let's get rid of this. Get rid of that. Get rid of this. A little bit of that, a little bit of this, a little bit of that. So, Ryan, hopefully that made sense. Thank you for showing me the numbers. Now it makes sense. Yes, if I get one person. I got one person tonight. Yeah, I got one convert. Yay. Praetorian. Good evening, good evening, good evening. All right, what else did we come up with? Joe, what's happening there, Joe? Nick, I see you over there. Kissable showed up. Yay, especially trading. Yep, Brian, I hope that made sense. Okay. Okay, so for you guys that don't know, okay, I'm live streaming on 13 different platforms. So I have 9 cameras in front of me. And each well, not every camera, but almost every camera has a screen with a whole bunch of questions that I'm trying to get to. So if I don't get to your question right away, I'm not ignoring you. It's just I'm trying to process all the information from all the different platforms. All right, Motivation Mind wants to take a look at Oracle. That's one way of doing it. ORCL. Interesting. Now, I've been watching Oracle drop. Today, she finally started turning around. So it's not going to be a yes for this week, but it's a strong possibility for next week. You ready? Let's take a look. Here's the top. Here's the bottom. Here's where it was. Here's where it is. She shoots up, pulls back up, back down. What happened today? Let's zoom in because what happened today? Oh, I can feel it starting already. Oh, tickle in my throat. It's not a good thing. Ginger tea with honey and lemon. No, wait. Honey and cinnamon. All right, so you can clearly see it right there. 30-day high, 30-day bottom was yesterday. This is only 1 day up. Only one. So yeah, I'm going to be looking at it tomorrow, and I'm going to be looking at it on Friday. So that's definitely going to be on my list for Monday morning if the next 2 days are going to the upside. All right. All right, so hopefully that made sense, Drezik. Corey wants to take a look at Coke. Now, Corey, do you want to look at Coke as in Coca-Cola, which is K-O, or do you want to look at Coke as in Coke tar and whatever else they do, C-O-K-E? Let's look at C-O-K-E. I'm not 100% sure that's on my list. No, it's not. So I don't do monthlies. The numbers just don't work. For me, anyway. Hey, Joe Schmo wants to take a look at Toast. Joe Schmo didn't get enough breakfast this morning. So, Joe, Toast is not pulling up, dude. T-O-A-S-T. It's not pulling up. Oh, T-O-S-T. That might be a little easier. T-O-S-T. Whoops. T-O-S-T. Interesting. Unfortunately, do you see that right there? Okay, hold on. Same thing. The top, the bottom. Where was it? Where is it? Look at the motion. Up, down, up, down, up. Okay, you may think it keep going, but let's look at the numbers and see if you agree. Okay, here's the bottom, 24. Okay, she shoots up to 31. Do the math. 24 to 31 is $7. Well, $7 on a $24 stock is not quite 30%, but it's pretty damn close to it. So this baby just jumped up 30%. Yeah, no thank you. What else do I got? What else? Tell me. Okay, we just looked at Coke. That was going to be a no. Coffee, thank you. Rug, 43 rug. But then why, if would I sell a covered call on it, capping my gains every week for that? All right, 43 rug. Let me see if I can explain this to you in a manner in which you'll understand. If I like the stock, I'm bullish and I think it's going to go up. Okay, I'm going to agree with you. Now, let's play a little bit tit for tat, all right? You tell me you like to buy a stock and watch it go up. So do I. Okay, now I got another question for you. How many years consistently, have you achieved 50% or more every single year? Consistently, your strategy. Because stocks go up and stocks go down. They're all doing the exact same thing. Let's back this up a little bit. Okay? They go up, they go down, up, 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 down. That's what they do. That's all they do. They go up, they go down. That's it. So if I jump into the same stock you do, I jump out, let's say 2 or 3%, and you just keep on taking it for the ride. Well, what are you going to do when it goes down? And it's not an if, it's a when. Stocks do two things and only two things. And you ain't no angel just because you bought it, it's going to do nothing but go up. It just doesn't work that way. Stocks go up and stocks go down. So what do you do when the stocks go down? It's a question for you. 43, what was his name? 43 what? Oh, 43 rug. Yeah, I get it. Joe Schmo wants to take a look at Nucor and you. Interesting. Okay, so almost the same thing as the last one. The high of the year, low of the year, now she goes from 11 to 14. Well, 11 to 14 is $3. $3 on $11 stock is right around 25, 27%, something like that. I'm not jumping into that. Thank you there, Nelson. Bob, how you doing? Coffee with Sandy. Joe Schmo, Lyft. Really? Really, Joe? Lyft. What do you think, Joe? It's at 13 and it jumped up to 16. So 13 to 16 is only $3. Well, $3 on a $13 stock is over 20%. Do I ask yourself, you buy something, it jumps up 20%, are you holding it? Or are you jumping and taking the profits? Because it's not a profit until you take it. And if you never take a profit, don't be amazed if the market takes it away from you. Because they go up and then they go down. Okay, I don't know about you, and you may live in a world where nobody sells. There's nothing wrong with that. But it's always going to depend on what is it you're looking for. Are you looking for capital appreciation for the stock to grow, 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 grow? Well, if that's the case, you're in the wrong place. Okay, I'm 62. I'm looking for cash flow. I'm not looking for the stock to go up, up, up. I'm just not. Okay, I want the cash flow, and I only want to use good quality companies with historical performance, which means they've done it over and over and over again. It's my money. Shouldn't I be in charge of where it goes? Shouldn't it make sense to me? Well, for me, I only want companies that are consistently profitable, and I'm not looking to get married again. Basically, I don't want to buy a stock and hold on to it forever. I want to buy it, I want to make some money off of it, and I want to sell it for a profit. What other questions do we have? Yeah, we're going to look at Lyft. Thank you, Raul. Terra DMV boy, what's happening? Ace Tucson. Okay. Oh, thank you there, Nelson. That was nice of you. Weekly returns this month. Thank you. Drezik. Yep, we already did that one. We already did Coca-Cola. We already did Toast. You're looking forward to it. Divorced female executive protection. Okay. Nelson, thank you. See, Nelson, I can't tell you what to start with. What I can suggest is you paper trade first so that you make your mistakes and with monopoly money, not real money. What's my strategy? You get no name there, dude. You at least know my name. If you're going to ask me a question, at least tell me what your name is. Kilroy! I wouldn't want it to rocket and lose, but it depends on your volume. Kilroy, I'm going to agree with you. You know what I mean? I can definitely do that. That works. All right, Dell. Was it comfortable? Yes, the couch was very comfortable. It was a very nice couch. I hate to get rid. You know it sucks. You pay $3,000 for a couch, and then when the wife leaves, you have a yard sale. You sell it for $50. I spent $3,500 for one of those big huge TVs. Yeah, ended up selling that for $50 too. Horrible situation. Kareem, how you doing? Trade stand disc. No, too much. Or a month. No, I don't do monthlies. Okay, Spenderbach. Hey, dude, I haven't seen you in a while. AAPL. Apple. No. Okay. Now, the only reason I'm saying no for Apple is it's at the high of the year. Okay. Now, I've been doing this for a very long time, and I've never, ever met anybody who says, hey, I got a great strategy for you. When the stock hits the high of the year, let's buy it. I've never heard that. How do you think SpaceX will go for the week? Don't know, don't care. Nelson, okay, you're relatively new here, Nelson, because I've never seen you before, but hey, okay, fine. I don't do SpaceX. I don't do IPOs. Okay, now I did them when I was younger, because if I screwed up and lost money, I could go back to work and make a little bit more. Well, I'm retired now, so I have no desire to go back to work. So the money that I have, I'm very protective of it. SpaceX doesn't have any profits yet. Doesn't have any products yet. So no. Celsius. Is that CLS? No, it's not. I don't know. What is Celsius? CEL? No. CHEL? No, that ain't it. Shit. Nope, I don't know Celsius. How do you think space... Oh, I'm not going to do that one again. Why aren't you using TradeView? All right, I'm going to explain to you why I'm not using TradeView. You ready? And I want you to listen because I'm going to say it really slowly. If it ain't broke, don't fix it. That's it. If it ain't broke, don't fix it. That's what I'm going to say to that question. Nice. Growth dividend stocks or just dividend stocks? No. Pre-qualified dividend stocks. These are the cream of the crop. Dividend kings. 5 decades of consistently increasing their profits. Dividend aristocrats. 25 years consistently increasing their profits. Dividend champions. 25 years increased profits. The rules are a little bit different between the aristocrats and the champions, but they both still have 25 years increased profits. And then the dividend contenders, 10 to 24 years increased profits, and then anything on Warren Buffett's list. So those 5 lists right there are good quality companies, consistently profitable. Those are the ones that I like. I won't discuss SpaceX. Yeah, thank you this week then. SpaceX just Joseph WDX. All right, got a minor problem with that. WDX has no options. Oh, WDC. There we go. Well, imagine that. Well, what about this? Okay, the bottom is here at $50, shoots up to 800. Now she's dropping. Ask yourself a question. How far did you think it was going to go? Hold on. No, seriously. It was $50 last year. $50. Last month it was 800. It went from $50 to 800. Well, they do 2 things. They go up and then they go down. How much higher did you think it was going to go? If everybody thought it was worth more than $800 a share, it would have kept on going. But no, there's always going to come a point where investors say, you know what, that's a little too rich for my blood. And that was $800. So it just started dropping. And I don't want to buy something that's dropping. Red J, W Day. I actually have some of this. Don't ask me why. Summer heat just takes all the moisture out of my lips. Isn't that a tragedy? Here we go. 141.82. Look at the motion. The high, the low. Where was it? Where is it? Down, sideways, up. What's going on right there? Let's zoom in. Wait, before I do, the 141s, the 142. Oh, hell yeah. That looks nice. But what is she doing? Down, up. It's at the high of the 30-day period. No, thank you. Sorry. Amazon! Drop in the ocean. AMZN. MZN. No. What? Why? Come on. Can't you see that? Can't you see that I'm not afraid? What's that? 226 to 256. 226, that's $30. Okay, 226, 256, that's 10, about 13%. From here to here, 13%. Ask yourself the question. You bought something 3 weeks ago, and now it's up 13%. Would you take the profit, or would you let it ride? It's all different. There's no right answer, and there's no wrong answer. You have to decide what you want to do. You want to hold out and let it go up to $500, fine, you do that. But I'm looking for cash flow. I want to jump in, I want to jump out within 5 days. Sorry. All right, let's keep on keeping on. Do you trade futures no? Hey, brother, the last couple of days I've been asking you about Netflix. We looked at Netflix last night. NFLX, Netflix. Okay, take a look right here, Netflix. Here's your top, here's your bottom. Here's where it was. Here's where it is. Sideways, down, up, down. What's going on right there? Let's zoom in. Zoom in the last 30 days. What do you think? Top, bottom, was, is, down, up, down. Couple more days, maybe, because you got your rebounds. Here's your 30-day high. Here's your 30-day low. Here's your Fibonacci rebounds crap. Okay? Profit taking again. There it is. Here's your new bottom right there. 1 day up. So Netflix has 1 day up. So it's a possibility for next week. Joseph, should I sell WDC before earnings? WDC. Well, see, I can't answer this question for you because I have no idea what you bought it at. Okay? And then, even if I did know what you bought it at, I still couldn't tell you what to do. But I can tell you a couple of things. Number one, it's not a profit until you take it. Same thing on the other side. It's not a loss until you accept it. Just because the stock goes down doesn't mean you have to sell it at a loss. I got 4 stocks right now that are down over 20%. A little uncomfortable, yeah, but I'm not going to sell them. I wouldn't have bought them if I didn't want them. But I do collect something every single week from them. All right. Yeah, Western Digital is dropping, looking for a new bottom. Now, don't get me wrong, 30-day top, 30-day bottom was today. Where's the bottom? We don't know. It could be lower tomorrow. Until there's 2 days to the upside. On the 3rd day, I'll jump in. It's just not here yet. PWR. Isn't that a monthly PWR? PWR. Yes, it is. It's a monthly. I don't do monthly options. The monthly options are easy to find. Okay, July, August, September, October, November, blah, 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 blah. Those are months of the year. They trade once a month. There's no way you're getting weekly cash flow from an option that trades once a month. It just doesn't work that way. Oracle user 161915934. What were your parents thinking when they named you that? I always wondered that, like Moon, Dweezil. Like, where do people come up with these names? I'm not saying it's good or bad. It's just, 161915934. Why couldn't he? Pete, Tom, Betty. I don't know. Your boy or God. I don't know. Oracle. Okay. ORCL. Oh, nice. Wait a minute. Didn't we already look at Oracle? Big, huge drop here. We have 1 day to the upside. That's it. Yeah, right there. I've been watching this thing for the past couple of months. Drop, 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 drop. New bottom yesterday. Today's 1 day up. Let's do Oracle for the fun of it. Because I like Oracle. I actually have some, so let's take a gander. All right, we're looking at 133. There it is. Here we go. Oracle at 133. One covered call, Oracle, ORCL. 24 July, that's next Friday. The 133 call option. The stock's at 132.38. Okay, but 133, okay. My profit, 542, and I only get to put up 12,000 this time. Okay, what does those numbers look like? Profit, 542, divided by the investment. What is this costing me? Remember, I'm looking to create a weekly cash producing asset. An asset is going to get weekly cash flow. So what is this asset costing me? Well, cost of the trade plus commissions and fees, $12,758. 4.2% for 1 week, Oracle. If you like Oracle, and it's always going to come down to that last question. Do I like this company? Do I think this company is a good place for me to park my money? It's a yes or no question. You either like it or you don't. They're either profitable or they're not. It makes sense or it doesn't. I'm terribly sorry to be so simplistic. Remember, this was created for a 9-year-old little girl, okay, and she wasn't a Mensa student. Morgan Stanley, I can say no to it right now before I even look at it. what part of what you're seeing here thinks I'm going to put $100,000 into anything? Or is that Goldman Sachs? Was it Goldman Sachs or Morgan Stanley that's up over $1,000? We'll check it out. All right, so yeah, I'm going to save this one, 4.2. And there you go, 4.2. All right, let's get rid of this. Get rid of that. Change that back to this. Pull that up right there. Here she is. Yeah, here we go. One covered call, Oracle, ORCL, 24 July 26. That's this, not this Friday, next Friday. The 133 call option, 542's profit, 12,758. Little guys is the investment. For a weekly cash flow or a weekly rate of return of 4. What was it? 4 point what? 4.2. 4.2 for 1 week. If you like Oracle. $4.2 ORCL Oracle. Yay! Crowd goes wild. Woohoo! That's only 2. We got 3 more to come up with. What do we got? Power, PWR. What is that? What's this? There's something in the air, PWR. What's this? It's a no. I dare. I don't do monthlies. No, the numbers just don't ever work. Just don't work. I don't want to work. Donald Jackson. I'm paying. Oh, Donald Jackson. That's not a nice thing to say. ILO. TLT. What the hell is TLT? Okay. Let's take a look. Oh, iShares from BlackRock. Oh, yay. Wait a minute. Before we even get into this, let's go to Yahoo Finance and see how many years this thing has been successfully profitable. I'm going to need the glasses for this one. Right there. Right here. And we are going to put, what is this one? TLT. Really? TLT. Oh, there we go. Okay. You ready? TLT. iShares 20-year Treasury Bond Fund ETF. TLT. Okay. So, current price, 84.24. What I want to look at now is the consistency of profitability. Now, if you don't know what we're looking at, this is called the data stream or the data storage or whatever you want to call it. It gives every single dividend, every single stock price since the beginning of TLT or whatever company we're looking at. If we're looking at Microsoft, we'll look at 30, 40 years of data. Okay, but for TLT, I just want to look at 20 years, 2 decades, 20 years. So are they consistently profitable? Now, when I mean consistently profitable, 1, 2, 4, 7, 11, 15, 19, 27, 32, higher profits year after year after year after year. No going backwards. Does it? Yes or no? Let's find out. I've never seen this one before. Colin! What's happening, Colin? Nice to see you. Nice to stop in, Colin. All right, so let's go all the way back as far as we can. 21, 20, 19, 18, 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6. There it is, 2006. There we go, 2006. Are we ready? Let's see. 2006. 32. Lower. Higher, lower. Higher, lower. Not looking good so far. lower, higher, lower, 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 higher, lower, higher, higher, lower, higher, lower. I'm going to say no now before I get all bogged down to this crap. When I got to show you one because apparently you don't quite get it. Okay? When I say consistently profitable, it should look something like this. I'm going to show you Microsoft. We all know who Microsoft is. 25 years consistently increasing their profits year after year after year. You ready? 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36. Shall I keep going? 39, 42, 46, 51, 56, 62, 68. Shall I keep going? The company is consistently profitable year after year after year after year. Now, I know it doesn't mean anything to some of you people, but as a retired person, there's something about, see if you can grasp this for a second. Let's say this week I get $1,000. Next week I get $1,000. Next week after that I get $700. Week after that I get $600. Week after that I get $1,100. Week after that I get $700. Week after that I get $1,200. No, that doesn't work for me. Terribly sorry. If the company's not consistently profitable, no, thank you. There's over 350 different companies, and I'm not keeping the list from you. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, anything on Warren Buffett's list. 350 different companies right there, those 5 lists. Why would I put my money into something, TLT? Wait a second, hold on. Let's take a look at what the yield is for TLT. I sometimes I just don't get it. Someone's going to have to explain it to me in a manner which I'll understand. Not only do I want consistency of profitability, I want to make sure I'm at least beating, what do they call it, inflation? Come on, if I'm going to pick something crappy, please let it beat inflation. Okay, TLT is paying 95%. That's awesome! 0.95. It's not even 1% for the year. Inflation's over 3%, and you're putting your money into something that pays less than 1%? I gotta calm myself down. It's like, seriously, dude, what the hell are you thinking? Seriously, you putting your... Okay, never mind. Never mind, let's go. Next. Some people, I just don't understand it. It's your own money, and you're putting it into something that's not consistently profitable and pays you less than inflation. Next. Intel. Ooh, low. Intel. INTs. I don't have any Intel. That's probably why. Yeah, I got rid of my Intel down here because that right there just didn't make any sense to me. But we're at 102.99 now, and we're dropping, so we're looking for a new bottom. What's the topic? Dividend investing for weekly cash flow using pre-qualified dividend stocks that consistently give me 1% every single week. Can you do same thing with MU? No. MU's just out of my price range. Why would I want to put 100 grand into any one position? It just doesn't make sense for me. If I can make 1 or 2, 3% on a $20 or $30 stock, why would I buy a stock that's $1,000? It's a numbers game. That's all it is. It's a numbers game. Okay? There are some good quality companies that will give me 1% or more every single week that are under $100. No, I'm not saying it's good or bad. Okay, you know what I mean? Not everybody has the ability to put $100,000 into one position. So no, I don't do stocks over $400. Anyway, so what I'm looking for with Intel, okay, here's the top, here's the bottom. I'm waiting for the new bottom for it to turn around and go back up again. As soon as it hits 2 days. Now I'm putting Intel on my list for next week because that thing's going to find a bottom sooner or later. All right, Red J, we already looked at W Day. Ken Banks, good evening, and good evening to you. What platform am I using for data? That was Yahoo Finance. Jose Lewis, you really want me to look at PLTR? That company's not profitable either, dude. Seriously, it's not. PLTR. You really should not. I'm not telling you what to buy. I'm not telling you what to sell. What I'm asking you to do is research. Is the company you're thinking of putting your money into, is it consistently profitable? It's a yes or a no. PLTR is not consistently profitable. I'm not saying not to buy it. I'm just saying I wouldn't buy it. I wouldn't buy it with your money. Here's the top. Here's the bottom. Okay, here's where we are right here. Last 30 days. There you go. 30 days ago, 132, dropped to 106, shot up to 140, back to 122. Now we're sitting at 133. All right, down, up. What's going on there? I don't buy at the high. Look how close it is. A little too close for me. And I don't do PLTR anyway because it's not profitable. It just doesn't make sense. PWR, isn't that, that's a monthly, isn't it? Yeah, it is. CRM. Crumb. They call me Crumb. Harry Crumb. All right, so what's going on there? 167. The 167 is going for almost $5. Is she stalling right there? Let's check it out. Last 30 days. I don't know. High, low, back up. Can it keep going? Maybe. Up, down, up. Really indecisive there. But at the 170, that's going for 380. And, oh, those numbers look good. All right, let's do CRM. See what it looks like. OMQ. Oh, my queen. Covered call right there. Glasses, if you may. The 170s right there. Right there. Here we go. Here's Johnny. One covered call CRM, 24 July, 170 call option. The stock's at 167. That's pretty close to 170. 690 is the profit. 16,000 is the investment. What's the rate of return? 690 divide 16, 310, 4.2. Holy cow, 4.2. 4.2. Why not? I like 4.2. We'll get to that in a second. Let's get rid of this. Get rid of that. Back to that. Back to this. And what are we looking at? Okay. There it is. CRM. One covered call. CRM. 24 July. That's next Friday. The 170 call option. 690 is the profit, 16,000 is the investment for a 4.2% for 1 week. That is, of course, if you like this company. Always going to come down to that. It is. 4.2, and that is CRM. Got 2 more to go. What do we got? KTOS. Lucid. KTOS. KTOS. Well, I'm kind of curious about this right here. Top, bottom, is, look at this, up, down, what's going on here? 49.68, the 50s are going for $2. That's 4%. 4% for 1 week, if it makes sense and you like the company. All right, so zoom into the 30 days. What's going on? What's this? There's something in the air. What's this? There's white stuff everywhere. What is this? Okay, down, up, down, up. It's definitely going up. Here's your bottom. 1 day up, 2 days up. Even though it's a red day. It is a red day, okay? The high, the low. It's still a higher high and still a higher low. So it's definitely 2 days up. I would, tomorrow, would like to see it open right here at 52. Okay? Because there's right there. That's where I want to get in. Right there. The top horizontal line of the candle. Okay? 2 days. 1, 2. If she hits that, then I'll jump in. And that would be $2. Let's do this one. This is number 4. K-Toss. All right, K-Toss, $1.50. There it is right there. There it is right there. Here we go. One covered call, K-Toss. 24 July. That's next Friday. The $50 call option. Look at the price, $50. I'm going to buy it at $50, sell it at $50, and still walk away with a profit. That right there should blow your mind. I'm going to buy it for $50. I'm going to sell it for $50, and I'm going to walk away with a 4% profit. That's crazy. That's what you should be asking yourself. How the hell is that? Okay, 242 is the profit, the investment. 47.58 comes to a total of 5%. Yeah, that's even better. It's even better if you like this company. It's always going to come down to the last few questions. Number 1, does it make sense? Number 2, do I like this company? Why isn't that changing? Oh, wait a second. Did we just, yeah, okay, it's right there. There it is. 1 covered call, K-Toss, 24 July, the 50 call option. 242 is the profit. 47.58 is the investment. Okay, 5% for 1 week. If it makes sense and you like the company, it's always going to come down to that. Do you like the company? Does it make sense? Blah, 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 blah. T-O-S. Ooh, sugar. I didn't get there fast enough. Anyway, let's get rid of this. We need 1 more to go. What time is it? Oh, look at that. It's time for our phone call. You ready? Who wants to call in? Uh-oh, phone number. Taking phone calls. 727 543 543 9418 9418. Lines are now open if you want to call in and ask questions. OMQ, oh my queen, wants to take a look at Lucent. L-U. Lucid. Is that right? Yeah. LCID. McAllen, Texas. Come on down. You're the next contestant on The Price is Right. Hey, how's it going? Hello?
Hello.
Hello.
Oh, hey, man. How's it going, man? I'm watching it live. I was wondering if you could keep up. I'm a little slow.
Okay.
What? If you could check out Oracle, you haven't yet.
No, we already checked out Oracle earlier.
I missed it.
No, we're waiting for the bottom to show up hopefully sometime next week.
Okay. I'll tune in then. Thank you.
That was it? Nothing else? Other than that, it makes total sense?
Yeah, man. I've been keeping up with your lives for a while.
Okay. All right, well, thank you.
Awesome. Thank you. Have a nice night.
You have a nice night, too. All right, so Lucid. We're at bottom right there. Uh-oh, what's going on with that? Okay. The high, oh, wait a second. We get the high a year ago, drop back up, back down. You get a new bottom right there. What's going on? $5.95. The 6s are going for 40 cents. Well, that's over 6%. Okay, it either makes sense or it doesn't. You either like it or you don't. Okay, phone line's still open if anybody wants to call in. Okay, Lucid. Okay, if you like Lucid, here's the top, here's the bottom, 1 day up. That's all we got, just 1 day. But look at the numbers. The numbers are still Rochester, New York. Rochester, New York. Come on down. How you doing today?
Better than I deserve. How about yourself?
If I was doing any better, I'd be twins.
Hey, I just tuned into the channel and absolutely love what you do, so I really appreciate it.
You're welcome, sir.
Yeah. Quick thought. I was looking at a weekly dividend stock, right? The ETF. It's based on performance. I think what Tesla does. It's TSLY.
Okay, hold on a second. Let me pull it up. TSLY. That's a monthly. Okay, it pays weekly dividends, but it has monthly options, which means I would only trade it once a month. Do you understand?
What are your thoughts towards holding it just for the weekly dividends as an income stream?
All right, hold on. Let's go check it out. Because I'm strictly a numbers guy. Strictly numbers guy. Either the numbers work or they don't. So TSLY. TSLY. Pulling it up on Yahoo Finance, see what those numbers look like. Well, the yield is 33%. That's the best I've seen in a long time. Year to date, profit and loss at the negative 5% at the moment. So let's check out the dividends, what they look like. Okay. I'm kind of curious, how many years has this thing been available? 4 years. All right, well, let's take a look. Oh, no, this is not good, brother. All right, let me show you. Hold on. First, okay, hold on. All right, this guy called me right back. No, he'll have to come back later. All right, whoever's calling in next, hold on tight. So look at the very first dividend was $9.99. And then it went to 903, 902, 829. Then it went to 440. Then it went to 8. It's all over the place. But look, it keeps dropping, dropping, and dropping. Okay, last year was 196, and then end of last year was at 44. Now this year we're looking at 29, 51, 38. Now we're at 27. Apparently, it keeps dropping, dropping, and dropping. So what do you think?
Sounds like a sinking ship.
It's just numbers, dude. Let me get this other call. Thanks for calling.
Thank you.
Hello, hello. Hello.
Hi.
Hello, and how are you today? Hello.
I have a question about a stock. It's the 2-time leverage ETF.
Okay. And what's the ticker symbol?
It is a COML.
COML. Bloomberg Global Commodity Copper.
And I have a question because for
Wait a
the
minute,
whole
wait a
year,
minute,
I was
wait.
trading this stock
Wait,
and
wait,
it had
wait.
very good premiums.
Okay, hold on a
And then
second.
about 2 months ago, they abruptly changed from weekly options to monthly.
Okay, hold
And
on.
I don't know what happened.
Yeah, but what I'm trying to say, it's not coming up. COML is not coming up, so I have no idea what it is.
No. CONL. N as in Nancy.
Oh, as in Nancy. So is that Charlie, October, November, Lima?
Exactly.
See? See, okay. There you go. Ooh, ow. Ooh. It's a monthly now, so that's definitely a no. Looks like she's bouncing up from the bottom. Okay, 30-day high, the bottom, back up, back down, back up. Now, I have no idea where you jumped into it, but let's go to Yahoo Finance and see if this thing's profitable or not. CONL. Now, how long have you been investing? Hello?
For 2 years now.
For 2 years. Did you look at?
Yes, I'm here.
Yeah, but did you look at the profits?
Yeah, so I sell covered calls and I sell cash secured puts.
Yeah, awesome, great. I love both of those strategies. Work great. But on this one, they've only paid out one dividend, and that was in February 2024, 2.5 years ago. Now, do you already own this thing?
Yeah, I own because I got a sign a couple of months ago when it was like at 1650 and then it kind of tanked. But my question to you is, do you know why would a company discontinue weekly premiums and go to monthly premiums?
That you'd have to ask someone in the company. But did you look at the numbers? Year-to-date total return, negative 65%. How long ago did you jump into this thing?
So this year, in the beginning of the year, so I got a sign at like 1650 and then just it tanked. So I'm kind of like holding and hoping for it to go back up.
Okay, so you're up here. You got back in January. Is that correct? Is that about right? Back in January?
I want to say about like January. Yes, it was like 1650. Like my assignment price is like 1650, 1550.
Okay. And I'm assuming you did a cash secured put and you got the wrong end of the stick, right?
Yeah, I did the cash secured put, so my kind of break even point, I think like 1350 or something like this.
Yeah. Okay. Now, let me ask you a question. What was the main reason, what was the main attraction to this company? Or was it just the...
The main attraction was very juicy premiums.
Do you know they do that for a reason? Did you know? Did you know that?
I do now, probably because it's highly volatile stock.
They give you high premiums to suck you out of your money. No, I can't say anything good or bad about the company because I have no idea who they are.
What is your prediction for this stock? Do you think it's going to recover anytime this year?
Okay, so I can't give you any prediction on something I have no clue on. And there's a reason I don't have a clue on this one. Number one, I don't do monthly, so it doesn't make any sense for me to look at them. Number two, it doesn't have 20 years of consistent profits. Another reason I personally wouldn't look at it. Now, how old are you roughly? You don't have to give me the exact age if you don't want to.
In my early 40s.
Early 40s. So you got another 20 years to go. So you can screw up royally and still have a good retirement. At 62 years old, I don't have the same luxury of being wrong. Okay? I have no desire to go back to work, so I have to choose my stocks that I get into a little bit more cautiously. Okay? So my main objective is preservation of my capital
Makes sense.
in safe weekly trades. That's why I only trade the best of the best. The dividend kings, the dividend aristocrats. And I'm only looking for 1%. Now, I have in the past got sucked in by big premiums, and I've learned my lesson. And it sounds like you might be learning your lesson too.
Do you have the answer? Can you please tell me what would be the reason for the company to abruptly start doing a monthly instead of weeklies? Like, what was the cause? Because I called my brokerage and I asked them about this specific ETF, and they had no idea why would they change from weekly to monthly.
I'm going to go with their answer. Okay, see, there's 11,497 companies that trade every day on the stock market. This is one I've never ever heard of. And there's a reason why I've never heard of it. Because it doesn't fit what I'm looking for.
So this particular 2-time leverage ETF. It tracks the Coinbase. It
Yeah.
tracks the Bitcoin.
Yeah, I get that. See, I understand everything you're saying, but I'm going back to what I said in the first place. It's not something I would waste my time on, me personally, because it doesn't fit what I'm doing. There's 11,400 different companies. Why would I be looking at this one if it doesn't fit? That's like when you go into a store, you're looking for a new pair of shoes or a new jacket. It looks great, but if it doesn't fit, it doesn't fit. There's no difference. This doesn't fit what I'm looking for, so I would never, ever, ever look at it unless somebody asked me to look at it. So I'm looking at it and I'm thinking, no, no, hell no. It takes me 2 or 3 seconds to say that. Because I look for something, because the older you get, the more you value your time. So I take one look at this, I look at the 1 year chart, it says the first thing I always want to see, the 1 year chart. Okay? It's at 73 bucks. Now it's at $5. Then I take a look, it's a monthly optionable stock. No, next, it's 3 seconds, I never need to see it again. Because as nice as that pair of boots look like, as nice as that jacket looked, if it doesn't fit, I'm not going to get it. Does that make sense?
Got it. Well, thank you.
You're
Thank you.
welcome.
I appreciate you taking the call and explaining.
I'm terribly sorry you learned your lesson, dear. Let's hope it's not too bad. The worst I've ever done was $91,000 in one day.
Bye-bye.
Bye, dear. All right. Well, sorry about that. It is. Sometimes it happens. All right. Ken, what's happening, Ken? Nice to see you. Nice to stop by. Okay, so let's go back to what we're looking at. Lucid, we already did. NU. Antonio, NU. What is NU? Is NU Nucor? Is that right? We already looked at Nucor. It was a no. Nike. Wellness Wave. Nike. NKE. Okay, now I like Nike, but I don't like this right there, so we're going to say no, next. It's actually that simple, okay? You need to value your time a certain way. I take one look at it. I'm looking for the high. I'm looking for the low. Where was it a year ago? Where is it now? Where's the money flowing? Okay, and right there, that is this week. It's dropping right there. I don't have to look at the whole thing to say no, okay? Down, up, down. It's coming down. No, thank you. Next. There's way too many companies to be stuck on one just because it looks good. Hector, APH. APH. No. Not even 2 seconds, Hector. No. I don't do monthlies. It's just not worth my time. Okay, the older you get, you value your time differently. I want to take a quick look. If it's a yes, great. But you know what's even better than that, Hector? Somebody else does it for me. I don't have to waste my time. There's somebody out there somewhere going through every single company there is. Did they increase their profits this year? Great. They go on this list. That's it. Did they decrease their profits this year? Great. They come off of this list. Someone else does it for me. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on old Warren's list. Sorry, I'm just lazy. I don't know if you want to call it late. Well, yeah, I'm lazy. I want someone else to do the work for me. Great, they already did. There's the list. Just go to Google, Dividend Kings list 2026, and boom, the list pops up. Stupid disorder. Ooh, they actually have that? Xander, SanDisk. SNDK. No. Wasn't that quick? Number one, I don't buy anything over $1,000. This is 1,600 and it's going down. Yeah, no. Netflix has after hours earnings tomorrow. All right, Matthew, thank you. We already looked at that, by the way. Oh, David, Ethiopia, cool beans. How do you collect something every week on a stocks that are down? Ace of Hearts, how you doing today? All right, Ace of Hearts, I want to show you something. Hold on, I got to get set up so you can see it. All right, that's about good right there. All right, Ace. Ready? Here we go. How can I collect money on something that is down? Currently, SanDisk is at 1,615. That's the current price. Well, this right here is what is called at the money. That's the line, at the money. Let's do some numbers here. Right here. The line right there. That is called ATM, at the money. Okay? On the call side, this is called ITM, in the money. And over here, down here, it's called OTM, or out of the money. Okay. All right, so as the stock goes down, it gets further and further and further and further out of the money. So while it is going out of the money, I still have the ability to sell options against it. So in the money, the numbers get higher. Out of the money, the numbers get lower. So as the stock drops, it goes further and further and further out of the money. So let's look at some out of the money options or strike prices. Okay, if this is at the money right here, right now, and it's paying 165, I can go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. I can go 30 strikes out of the money and still pick up $106 per share. So even though the stock goes down, there's still an option available to sell against it. I want to stay away from near the money, because right here is at the money. That's where all the action is. Stocks go up, stocks go down. It crosses this line over and over and over again. But if the stock is down, I want to stay as far away from that as possible, but still bring in some money. And that is the reason why I want companies that increase their profits year after year after year. So when, it's not an if, listen closely, it's not an if the stock goes down, it's when. They do two things and only two things, and you ain't that special. Neither am I. Just because you buy something doesn't mean it's just going to go up. It just doesn't work that way. You got a 50-50 shot every single day. And most beginners lose money by hitting the wrong button. You laugh now. Everybody does it. I did it like 2-3 times this year. I've been trading for 30 years. Last year, I think I did it 4 times. I did it live online once. Hit a button, like, damn, it's $2,500 down the tubes. Hit a button, $2,500 evaporated, just like that. A hit of a button. Yeah, and everybody watched me do it too. Nobody said anything. Oh, you guys. Alexandra, how are you today? Alexandra, comment ça va toujours, mon chéri? All right, so let's keep on going. One meditate. How can you collect money weekly on a stock that is down 20%? You're not going to give that one up, are you? Even though I just told you. Okay, well, let me think what stock it is. I think it's Dell Oracle. No, what the hell one is it? Anyway, it's the exact same thing I just explained. Let's put in Dell. Okay. Okay. Even though the stock goes down, the further down it goes, at the money is always at the money. So currently Dell is at 412. If I bought Dell at 500 and now it's at 412, I can still sell the 425s and pick up $16 per share. It's way far away from at the money. See, at the money's right here. I'm talking about way down here, which is 1, 2, 3, 4, 5, 6, 7 strikes out of the money. I can go as far down as I need to be comfortable. And it's always, always, always going to be a you thing. Okay, just because I paid 500 way up here and now it's way down here, I can still sell the 425s, the 420s, the 450s, the 460s, the 470s because they all still have some value to them. Even as the stocks drop, the at the money, ATM stays exactly where it is. What does that mean? Well, right now, ATM is at 412. If the stock was 550, ATM would be 550. Wherever the stock is, that's where at the money is. It's actually that simple. If the stock's at 20 bucks, at the money would be 20 bucks. If it drops down to $10, at the money will be now at $10 because that's where the action is. That's where the money is at this moment in time. At the money is where it's at the moment. Where you got on, if I got on at 500, that's never going to change. So my entry price is always going to be the same. And I ask myself the same question every single day. What did I buy? Well, I bought it at 500. What did I sell? Well, I bought it at 500, but I sold the 425s. Where is it? Well, right now it's at 412. Where is it going? Well, it looks like it's going down. What should I do? Nothing. Let it expire. Next week we'll pick another strike price. Whatever the stock is, okay, at the money will be where. And then you go, me personally, I go 3 to 5 strikes out of the money if I'm selling below my cost basis. It's just a numbers game. Just like Monopoly. 5 green houses, 1 red hotel. Same thing. Okay, we already did KTOS. We already did ONDS. RITM. All right, we already did Amazon. SAN. Social Lily. Oh, it's nice to see you again. Nog. What the hell is Nog? How the hell is that? Uh-oh. Apple user. RDW. Redwire. Chappie. What the hell is Chappie? Wow, I missed a whole bunch of these, didn't I? Okay, we just did Oracle. Yeah, HIMS is good for a quick trade, but if it doesn't shoot past the highs, it's going to capitulate. Well, alrighty then. 6 Foot Asian, back again. Nice to see you. DA, at least 8 to 12% for safety. Okay. INTC, where I looked at that one. When it was at the 40s, new bottom is 80. Okay. Every week. 1%? What? Yes, Michael, 1% every week. ROI, just saw the sign. Absolutely, Michael, thank you. PLTR is a scam. Well, I don't like it either. Okay, Mindy wants to take a look at Home Depot. Home Depot. Well, interesting. Let's see what's going on with the big HD. The top, the bottom. Where was it? Where is it? Look at this. Up, down, up, down, up, down. What's going on right there? I got to change that. What's going on right there? Let's zoom in, see what's happening. Before I do, what do the numbers look like? 341. The 340s are going for 630. That's a little over 1 3/4%. Let's take a look. Oh, yeah. You like that one? Oh, yeah. All right. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Down. Here's your bottom. You should back up. Profit taking. Big gap down. Now she's going back up again. 340. The 340 right there. Nice. Let's do this one. This is number 5. Here it is. Home Depot. If you did not know, Home Depot is a dividend king. Means they get 5 decades or more of consistently increasing their dividends. When Home Depot pops up, it's a yes. But are the numbers working? That's always the kicker. I love the company, I do. But are the numbers right? Let's find out. Okay, so one covered call on Home Depot. And we're looking at the 340s. Here we go, number 5 for the evening. Let's do it. One covered call, Home Depot. 24 July, that's next Friday, the 340 call option. 533 is the profit, 33,000 is the investment. Let's do this one. Calculator. 533 is the profit divided by the investment, $33,467, and it comes to a grand total of 1.6%. Now remember, I'm only looking for 1%, because 1% every single week is over 50% by the end of the year. It either makes sense or it doesn't. It's 10:14. We're going to start doing questions. This is number 5 for the evening. That's all 5. And that's what we do. 5, 5, 5. Let's sing the song of 5. How many is 5? Who remembers that from Sesame Street? 5 royal banana splits. Oh, wait a second. What am I doing? Ooh. All right, there it is right there. La 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 la. One covered call, Home Depot, 24 July 26. That's next Friday. The 340 call option. Look at this, 338. 338. I'm going to sell for 340. Whoops. Going to sell for 340. 533 is the profit. 33,000 is my investment. Remember, I'm creating weekly cash flowing assets, which means I put up my $33,000 and every single week it will give me a rate of return every single week until it hits my target. And if it gets close to my target, well, I can always pick up my marbles and push them into next week. It's called rolling forward. I can roll it forward and pick up another one for next week and the week after, so on and so forth. As long as the numbers are going in my favor, I'm okay with it. What was this, 1.9 was it? 1.6. This is the low one of the day, 1.6. Home Depot, that's it. That's all 5. We already did Nike earlier. Intel, we already did Intel. All right, what do we got? Crow, Dean, Charlie. Okay. Wellness Wave, nice to see you. We already did Nike. Redwire, Colton, Redwire. Let's check out Redwire, just quickly. I hear Redwire is going to be very important in the future, but it's not there yet. RDW, is that right? RDW, Redwire. Yeah, it's dropping. I ain't ready to jump in yet, but no. What else do we got? Carter, Chapman, Queen Knight. What's going on, Queen Knight? Stacy, nice to see you. The man, Jeremy, Kevin, Juan Lugo, Jaro Corleto. Good evening. Jose Perez, ¿qué pasa, amigo? ¿Cómo están? Joe, Geraldo, Billy, Sam, Sean, Quito, Mark, Matt, Georgia Bell. Well, nice to see you, Georgia Bell. Carmen, Boldman, BB. All right, well, all you guys showing up today. Ella, Nanya. I knew I'm here. What are we talking about? We're talking about investing in dividend stocks for weekly cash flow, using pre-qualified dividend stocks. So those are companies that consistently increase in their profit for a minimum of 2 decades. Alexandra, CVX, Chevron. Now, Alexandra, I'm staying away from all oil stocks and all energy stocks only because of the crap going over in the Middle East. There she is right there. Make of it as you will. 30-day bottom. 30-day high. Now she's coming back down again. At least that's what it looks like. Welcome to 70. Ooh, I'm not looking forward to that. 6-foot Asian. We just looked at TSLY a little while ago. Fannie Mae. We'll look at tomorrow. I love your correlations, brother. Thank you kindly there, sir. Michael Ferreira wants to take a look at Chippy. We'll take a look at it tomorrow. Tomorrow. We'll look at it tomorrow. Michael, can you do the math slower for dummies who can't keep up? I'm not quite sure how to take that. All right. I'm going to do the math a little bit slower for Michael. You ready, Michael? CVX, Chevron, 180-160. So if I buy it at 180-160 and the closest strike price is 180 and the 180 is paying 380, all right? I'm buying by 181.60. Okay? The closest strike price is going to be the 180. I'm going to sell a 180 call option. Okay? Someone is going to pay me $3.80. So I'm walking away with 183.80. Did you see that? Okay. I'm buying it 180-160. I'm selling it for less than what I paid for it, 180. The covered call, someone's going to pay me $3.80. You add the two together, I'm walking away with 183.80, and then you subtract what I paid for it from what I'm walking away with, and I'm walking away with $2.20. Big deal, $2.20. But $2.20 profit per share. So each share that I get, I'm getting a $2.20 profit. So 100 shares, that's $220, right? So I'm walking away with a profit of $2.20. However, what is that profit? Okay, bring up the calculator. $220 or $2.20. Okay, $2.20 is my profit. Whoops. Is my profit. What am I paying for it? I'm paying $181.60. So I divide it by what I'm paying. Divide 181.60. And it comes to a grand total of 1.2%. Right there. 1.2% for 1 week. Let me see if I can go a little slower. I'm buying it for one price. I'm selling it for less than what I paid for it. And I'm walking away with a profit. And the profit I'm walking away with is 1.2%. My goal is 1%. But this is offering me 1.2. Well, 1.2 is not a lot of money. But what you're not keeping in mind is 1.2 for 1 week. And then I do it again next week, another 1%. And next week, another 1%. So I'm getting 1% every single week, bare minimum. That's my goal. If it doesn't work, I don't do it. Remember the part where I said simple, safe, predictable? If I'm not making 1%, I don't want to do it. So this one's offering me 1.2% for 1 week. So it's always, always, always going to be a numbers game. And when you get to the numbers game, it's always going to be the exact same questions. Number one, does it make sense? Number two, do I like this company? Number three, do I like this company at this current price? Because the prices go up and they go down, they go up and they go down. That's all they do. All right, so we'll get some more of this tomorrow. I'm here Sunday, Monday, Tuesday, Wednesday, Thursday, 8 p.m. Eastern Standard Time. Let's get some rest of these questions. Can you zoom in a bit? It's live on YouTube. You can actually look at it there. Alwex, I will. Will you buy leaps or buy shares outright? I don't do leaps. Okay, I only do those if I'm doing a poor man's covered call. Okay, or a calendar spread. Other than that, I don't buy options. SoFi, dude, look at the numbers. It's not as glamorous as they make you sound like it is. Micron, I don't do anything over $500. How many stocks you keep in your rotation? About 400. But I put them in the calendar. Hold on, let's get rid of this. Okay, so it's a good question. How many stocks do I keep in my rotation? All the stocks I have, about 350 to 400. That's about how many I have. They're all in the calendar. Because the calendar tells me what stocks I'm looking at this week. So we're here, so we're looking at Caterpillar, PNC, Dell, Apache, Levi's, Lowe's, CVS, Pfizer, Procter & Gamble, Costco, Signet. Companies, you probably heard the names of all these companies. Any company that is consistently profitable year after year after year after year and has weekly options, those are the ones I look at. Walmart, I like Walmart. Patriot Undercover, hello, sir. I have about 1,500 scrounged by OEM. How's Ford for my first 100 covered calls? Ooh, I like Ford. I don't think we looked at Ford today. Interesting. Take a good gander at it. Okay. Here's the high. She drops. Here's your bottom. Look at this. 1, 2, 3, 4, 5, 6 days. 6 days up. The top is here. We're here now. Look at all that space you got to go. Lovely. If you like Ford, of course. Would I buy IBM now? Of course I would, Mike. I love IBM. $1. Yeah, all right, Tucker. How you doing? That's Goldman, yeah. How about Ford? We already did that one. A high interest savings account does more. Yeah, he's absolutely right. A high interest savings account does like 4 or 5%. Some of these stocks and some of these ETFs, like hell no. No, I'm not going to do Micron, MU. No. Thank you, Fresh. Thank you, Patriot. Option or stock? I do both. What do you think about ONDS? We did that one early today. Dividend stocks are the best way to make money long term. Thank you. Did we find any good stocks under 40? I think we did. Where do you get all your trends and information from? Sarikison. Okay. Hold on. Okay, Sir Rickison, I get all my information from Charles Schwab and Yahoo Finance. I would like to pay for a personal class and learn some of your knowledge and skills, Sir Rickison. Top left-hand corner of the screen you're on it takes you to the bio. Okay, just DM me your information. As a matter of fact, anybody want to have a conversation, DM me your number. I will call you personally. If you think you're in the conversation with me via chat or text, email, Telegram, Substack, anything like that. No, it's not me. I don't do that. You want to have a conversation with me, drop me your number. I will call you. Don't put it on the screen here. DM me through the bio in whichever platform you're on. Miley, how you doing, Miley? What do you think about? Oh, you did that one already. Black Diamond. That's an inappropriate question, but thank you. Phil Marrow. I like Phil. Oh, is Hoy a trash stock in your opinion? Never heard of it, so I really can't give you an answer one way or the other. What do you do if your average cost is way above the current strike price? It's always going to be a picture, okay? Love glove, always. What did I buy? What did I sell? Where is it? Where is it going? What should I do? It's always the same questions over and over again. What did I buy? What did I sell? Where is it? Where's it going? What should I do? Sing it, brother. Yeah, okay. Unless it closes the week at 178, no profit. Not necessarily so, because you got to remember, I'm not looking for the stock price to go up. I'm only looking to sell premiums against my position. What calendar system? Dude, the calendar is right inside of Thinkorswim. Verizon, Big Yellow Bird. Hey, nice Big Yellow Bird. Nice to see you again. You're the only one who shows up with the name Big Yellow Bird, so yeah. What the hell is that? No, next time, Oracle, Chappie. But Katos doesn't have any dividends. Mindy, you're probably right. Now, Mindy, I did not say it was what I would buy, okay? I said I will look at what you want to look at. Not you specifically, but someone in the audience wanted to take a look at it. So I ran it through everything and it looked okay. Not saying that I would do it, okay? Social Lily, thank you kindly. Antonio, Sam, we'll take a look at tomorrow. User Amazon tomorrow. We'll look at it tomorrow. Johnny T, what's happening, Johnny T? Borico, what's that? Boricho Legacy, cool. Paul Nicole, 52% annual percentage rate. Yep. 1% a week, Paul, 1% every week is over 52% per year. Simple interest. You can't confuse simple interest with compound interest, two totally different animals. Winner 86, what the hell were you thinking? Monday decides, oh, wait a second, wait. What are the 5 stocks today? Gotta be late, blah, 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 blah. Can you please say it again? 3, 4 places below, out of the money, dude. Not at the money. 3 to 5 strikes out of the money, and it's always going to be dependent on the motion, the flow. Where is the stock going? How many people are buying? How many people are selling? And what does it look like? It's kind of like, remember the seesaws? Up, down, up, down, up, down. Well, if this is what it's doing, it's probably going to continue doing that. So where does it look like it's going? And it's always going to be, the best guess you got, because nobody really knows. It's just the best guess that you got, that you feel comfortable with, that you could still be able to get a good night's sleep with. Dr. Bean, Mr. Beans. We'll take a look at DRAM tomorrow. Hang up. Yep. Wow, Andrew, yay. It's not designed to be held long-term. Thank you, Andrew. Exactly. It's not a long-term strategy. It's 5 days, 10 days. That's it. How many contracts did she do, I wonder? I wonder that one too, but we never know. Colton, we already looked at RDW. All right. Guns. Micron, MU. Yeah, no, it's way out of my price range. All right, Sweet Den, you lost $120,000 on paper. I followed Lucid and sold it at $8 a share. Ouch. Mindy, we already looked at Nucor a long time ago. So glad she called in. MSFU, we'll take a look at it tomorrow. Am finding a stockbroker. Okay. MetLife. Ooh, we'll look at MetLife tomorrow. Got to show up a little bit earlier. Kevin, AT&T, Kohl's, Macy's. Dude, you got to show up a little bit earlier. Got bogged down with a lot of questions. Constellation Energy, Brian, I like that one. I invested $1 million in the strategy. Okay, now Brian, you said you invested $1 million into strategy. What strategy was that? And you're down 70%. Dude, I feel bad for you. I do. That's why I tell people always, always, always paper trade first before you put any money in anything. Movie official. Thank you. Options was a great lesson. All right, you're welcome. Ooh. What is your profession? I mean, what was my profession? I'm retired, dude. I've been retired for 3 years. It's lovely. It really, really is. Especially when you have enough money to do whatever you want. Now, if money was tight, it would be a little uncomfortable. But no, I'm perfectly comfortable where I am. My life is wonderful. Do I sell cash secured pits? Only when the time calls for it. There's a time and place for everything. Also, what were the 5 stocks today? I got here late. Mr. Strong Vision, what happens if you place a trade, covered call on Monday, and someone decides to buy it on Tuesday when you do it? The covered call on Monday, the buyer could buy it Monday, Tuesday, and Thursday. Yeah, absolutely. But here's the thing, okay? Mr. Strong Vision, here's the thing, okay? I don't want to own anything always. It's like I want to buy it, I want to get a profit, I want to get out. So if I buy this stock here, I sell it at the exact same price using a covered call, I collect the premium. If the premium's not at least 1%, I'm not even going to do it. So if I do my trade on Monday, I buy the stock, I sell the option on Monday, and somebody exercises it and takes it away from me on Tuesday, great. Wednesday, I'll buy something else. Come in, get my profit, get out. Come in, get my profit, get out. Come in, get my profit, get out. So on, so on, so on. Murph, man, it's 7 p.m., 9:30 a.m. Okay, no, it's 8 p.m. Eastern Standard Time. You're welcome, you're welcome. Okay, Patriot, we already checked out Ford. I already gave you my opinion on that. So, Mr. Strong Vision, okay, if I buy it on Monday and I sell it the same price I paid for it, using a covered call, and somebody exercise it on Tuesday, well, I get all my money back and I get to keep that covered call premium. That's my 1% that I'm looking for, okay? So I just buy something else, or I'll jump into the same company again. We'll take a look at IBM again tomorrow. All right, that being said, it's 10:30. We need some mood music. Where is my mood music? All right, let's get out of that. Let's get, I don't want that. I want to do this. And I want to do that. And then I want to go up over here because it's the screen behind me. I can't see anything. The screen turned off.
Here's what comes off a bowl of strawberries when you drop this device in the water. These berries are fresh from the store and already rinsed under the tap, but within 10 minutes, the water changes color.
I don't want
What floats
that.
to the surface will change how you feed your family. My friend works in food safety testing. Last month, she watched me rinse strawberries.
You dream.
Here we go. Have a good night, everyone. We'll do this again tomorrow.
Your heart set on giving, no matter the strain, building your legacy through love and brain. Julie knows that fire in your
Angela, how you doing?
the kind that lifts the broken heart. James, you reach the skies, no one dares. In your hands, the future's caught unawares.
That's to know what the hell were you thinking? Your life as a yard keeps the daylight blinking.
Every day's a quest, not some disguise. With James in the storm, the dream never dies. Retired, you say, with a wink and a grin, but the podcast is rolling, pulling us in. Your compass is love. my hood.